If you're running your accounting world, if you're running your financial world based on how much money is in the bank account, and that's it, you're not going to have the knowledge you need to expand safely, right? It might work out, but you don't know. All you're going off is a bank account. And so what you need to know is how much money am I making for every additional client I add or product I sell or whatever it is. You got to know those margins. And the only way you're going to be able to get that is to have that regular accounting work where you know what your profit margin is every month, and then you can divide it out amongst your products or amongst your service lines, whatever it is, and know, is this actually adding a lot of money? Maybe you do that analysis and you realize I'm spending all this time on this particular product or whatever, and I'm barely making anything, or maybe I'm losing money on it, while this other one I haven't paid much attention to is making all the money.
What's going on, everybody? My name is Ryan Snaadt, a Rhymes with Odd, and you're listening and watching the Rhymes with Odd podcast. Today, we're hopping back in the booth with another amazing guest. We got Grant Booth in the booth. What's
bet.
up?
I haven't heard that one yet. That's good.
Well, here we go. Like, yeah. But Grant is coming on to talk about all things finance, accounting. Yep. You're a CPA, but you're also a partner at Jacobsen Company.
Yes, I am.
Which is our financial management, our CPA firm. Yep. So thank you for all your great work with my wife and I's companies, because we definitely couldn't do it without you. Yeah. So
good. Good help.
Excited to have you on today.
Awesome.
So I know is this your first podcast?
This is my first podcast. So Forgive me if I'm a bit of a rookie and say weird things.
That's okay.
Try not to.
We'll keep you on the path to success here. It'll be a really fun conversation because I think, especially from your expertise and knowledge, there's so much in this world that people don't know and understand. They just assume that it's different than it actually is. And as I found out with my personal situation, there's so much with the tax stuff that you really need to talk to someone. When you get to a certain size, you need to be not doing it yourself, you know?
Yeah. I've heard a lot of interesting advice on TikTok and a lot of things that are not true. And it's an old phrase. Well, my neighbor told me that his accountant told him that, yada, yada could be true. And so it's fun to correct some of those things and help people right away understand. It's simpler than you think, but also it can be more complex than you realize at the same time. So.
Sure. Well, and I think a good place to kind of start would be if you could just introduce yourself, talk about who you are, what you do. Yep. I would say the annoying Uber driver that's really chatty. Hey, what do you do? If there's somebody like that, what's the answer you usually tell people when they say who you are and what you do?
Well, I usually just say I'm an accountant, but the full term, if I'm talking to business people, I'll say I'm a partner at a local CPA firm, Jacobsen Company. I do taxes and accounting. We don't do audit in our firm, so that's one thing about our firm that's a little bit different. But we do tax and accounting for small businesses primarily. We do a lot of nonprofit trade associations. We do a lot of outsourcing. Fractional CFO is the buzz term. So we do some of that work. We do budgeting and all of that. I became a partner in January of 2023, so I haven't been a partner super long, but our firm is growing. We have 13 people now. When I first started a decade ago, we had 4 people. So we're growing a lot, but we are still very much a local firm. So if you call us, you can get me right away. So.
Sure. Well, excited to talk more about this because there's so much that on just the business side, but also you guys as a firm, because you said, the growth and everything like that. Yep. Did you envision yourself becoming a partner at a firm when you first set out on this journey, or was it something that just kind of happened along the way?
Well, yeah. So I originally got this job as an intern a decade ago in 2014 or 2020, end of 2013. And I just started out as just getting an internship. I originally thought I wanted to be maybe a lawyer or a financial analyst or something like that. But then my fiance at the time said, well, my parents' accounting firm might be interested in an intern. They've never had one before. They only have 4 people. But they thought, whatever. And so I wrote up a little resume and sent it to them, and they brought me in and hired me, and I've been there ever since. But the funny thing is that very resume that they hired me with, I only got a C for it in college.
Oh, wow.
My professor didn't like the resume. Well, it got me hired at my forever job. So
sure,
that's been good enough.
That's exciting. Mm-hmm. Well, yeah, I guess before we jump into your current stuff too, probably should start back at your backstory. So kind of where you're from originally, what brought you to kind of ending up at Jacobsen?
You bet. Well, I'm from Ankeny. I've lived in Ankeny actually my entire life, which is kind of rare. Most people move to Ankeny, but I've grown up in Ankeny my entire life. Went to high school here in the area, went to a smaller Christian school. decided to go to college at DMAC and then Iowa State because it saved money. And I can
already see this track driving here.
I'm an accountant, so everything I do, like it was already in my mind before I knew I was going to be an accountant. But
you did 2 years at DMAC?
I did 2 years at DMAC. I highly recommend it, especially you got to pay your own college. Like my parents, I had to pay for it myself, and so I'm like, well, if I got to pay for this, I'll do this the smart way. So I went to Des Moines Area Community College. That's what DMAC stands for, and went through there and paid through it the whole way. I got married very young. I was only 20 years old when I got married, which is also kind of weird in modern day. But my wife had a full-time job as a hairstylist. And so she was able to get me through college, my second 2 years at Iowa State, and I got my accounting degree there. So I was working part-time at Jacobsen Company as an intern and was able to graduate without any college debt, which was pretty good. So
that's awesome. Yeah, it's hard to do anymore. I don't know if you heard Paige and I's story, but I left college with like almost 90 grand in debt. I went to Simpson in Indianola, and similarly, my
tough,
parents didn't pay for any of it. They're like, if you want to go there, you got to foot the bill. So it was like, oh gosh. So it's hard. What were some of the strategies you did besides just doing DMAC? What were some of the things you did to kind of make sure you got out without debt?
Well, I always worked. I probably worked 20 hours a week, always, even during college. I didn't. I kind of treated my college and my job as I was already working. I didn't spend a lot of time doing fun things, which maybe I should have spent a little more time doing fun things. But the reality is when you work a lot of hours and you go to a college, it doesn't cost a whole lot. It's not impossible to be able to pay for it. Mm-hmm. I did live with my parents for 2 years, so free rent.
Sure.
So yeah, if you can live with your parents while going to college, that'll save a lot of money. And so I just wanted to make sure I got through without a whole lot of debt. College degree is still very much worth it. It's a good investment, so it's not a bad thing to get debt for. Even though you don't get a technical asset like you do with buying a house, you're still getting your education, which is definitely an asset too. So,
well, if you look, people always say and I've had this debate with many people about, is college still worth it and all the different things. On average, people with a college degree are going to make much more than.
Oh yeah, look at the stats; it's everywhere.
Yeah, well, you can do trade school if that's the route you want to go. But
that's good too.
I always see that too as like, you're kind of pigeonholing yourself if you do that. I mean, if that's what you want to do, then great. But it's like if you're a plumber and you wake up 10 years from now and you're like, I don't want to be a plumber anymore, but all you have education is
limited.
that one thing. It's very hard to shift out unless you do something completely different. But so you graduate. Were you still in college when you started interning there? What was that journey like?
So I was almost through DMAC, and then I got the job. I sent in my C+ resume grade. I still got hired with it. I only got paid, I believe, $12.50 an hour, which felt like a lot of money back then. But I worked just part-time, 20 hours a week there while going to Iowa State, getting an accounting degree. It was kind of a cool thing for me able to be working at an accounting firm while also learning about accounting in college. You were able to see kind of like the theory and then the direct application. You saw some of the theory that didn't really apply to your average accountant or business world or just small business, but it was some interesting stuff, and it really enhanced my education. I understood things a lot more at a deeper level than just the textbook level.
Sure. Yeah. Well, it's interesting. A lot of people end up in an industry and they just kind of stay in there.
Yep.
Did you ever think about getting some experience outside of this, like doing other type of work or another industry?
Yeah, I thought about it, but it was pretty clear early on. The current managing partner, David Jacobson, was pretty clear with me that he thought I was really good at this and he really liked me, wanted me to stay. And I just got that impression that I was valued at that firm and I could help it grow and expand. And I just kind of felt like I could still get exposed to other businesses, because when you're in accounting, you get to see how other businesses work. You see their numbers, right? You get to see how some of their business models function. And that's, they call accounting the language of business. So you really do get to see and understand other industries. In public accounting, it's for the public, right? We work for the public. So you're able to see all different types of businesses. It's not just limited. So you don't feel too limited. Even though you're working for the same company the whole time, you just get so much variety of what you do. You're not doing the same thing all the time.
Mm-hmm. No, I love it. In your kind of travels, if you will, of the spreadsheets, traversing the spreadsheet slopes, what are one of the businesses that most people don't realize is like not very profitable as a whole?
Yeah, I would say any restaurants.
Saw that one coming.
are really, really low margins.
What's the average margin you see with a restaurant anymore?
I mean, less than 10. I mean, they're all less than 10%. I haven't seen a restaurant. If you have a restaurant making 10%, that's really good. A lot of it's just, and sometimes the margins don't matter too much. It's just about, what is that ending profit? If the ending profit's 20,000, you're probably not going to be able to survive very long, or certainly if it's negative. But if you're bringing in $100,000 and you have a fairly modest way you're living, and then it can work, even if the margin's only 1%. Obviously, you want that to be efficient, but restaurants is tough because there's so much competition. And it's one of those things people think they can do it, and they realize that even if they're a really good cook, they could be an amazing cook, make really good food. But if you don't know how to run the business part, it's going to be a disaster, and that can happen. And a lot of our clients actually have franchises, which is a little bit easier because you already have that model set out for yourself, and you can follow that formula that franchise provides, and you can really get away and really make some decent money with that, especially if you scale it with the right franchise and whatnot, and buy the right one and all of that. Also, retail can be really tough, just because again, the margins aren't super huge with retail. So whatever business you got that's got a thin margin, that makes it a little bit more difficult to make it work. There's large barriers to entry with restaurants, but also retail. You got to buy all that inventory when you're starting up. So there's a lot of upfront capital investment. Any construction businesses can sometimes get into trouble if it's not just a simple contractor. If you're trying to build stuff, it's not something you can just wake up one day and decide, I'm going to be a builder. There's a lot of things you got to do to be able to be ready for that.
Sure. So those are some of the worst ones that you've seen. What are some of the highest profit margin businesses?
Highest profit margin businesses are usually professional services. So legal services, financial advisors, social media marketing could sometimes be good. Just depends on how much cost you have. Accounting firms generally do well. Any professional service can do well. Contractors can even do well if it's just you showing up with a shovel and doing some labor, right? Mm-hmm. Technically, those margins can be good, but anything that doesn't require a lot of money up front, there's less risk because you don't have to borrow as much. It's just selling your ability to be a service provider. So any service business, professional service business, tends to have much higher margins. Part of the problem, though, becomes why doesn't everyone start a professional service business? Well, usually it requires some long degree program where you do have to go to maybe into some college debt or whatnot to be able to provide those services. Like you can't just wake up one day and decide I'm going to be a lawyer. Like you got to do a lot of work before you can become one. So.
Sure. Well, I always find it interesting because Paige and I would talk, and we just had her on for her episode, and she just launched her business last October, and seeing from the other side on her end, it's like I think she was saying like it's about 40% profit, and that's. Like not terrible, like in the grand scheme of things. I mean, I saw Walmart's margins like 3% on a retail.
Yep, retail.
Granted, they are one of the largest companies in the world.
Yep,
but
that 3% goes a long way.
Yes. But it's like that compared to like my margin's like 75% with what I do.
Yep.
And then you look at like I've talked with online educators that do like courses or whatever. You build it once and sell it. And that the margin on that's like 95%.
Oh yeah, because there's not what is it? I mean, some subscription services and your time. I mean, that's really what it is.
Yep. So like I've seen it from all different angles, but I can't even imagine being in like a sub 10% margin business.
Yeah.
And then you have like an employee asking for a ridiculous raise, or
they don't understand that aspect.
Yes, you're like you realize like I've got this much to work with, and you want to take most of it away.
Yeah.
And I get like. People just, their perception's different, but.
Yeah. And another thing that's interesting about businesses is usually when they're starting out, their margins are higher if it's successful. If it's not successful, those margins are negative and it won't last, right? Mm-hmm. If you have a successful business, as you grow, that percentage is going to decrease. And a lot of people think, oh, that's a bad thing. Well, over time, if you get to a certain point where you max out your own ability to do work, and you can no longer do it all yourself, and you realize I have to start hiring more people. So in professional services, the margins when you're just a sole person, sole practitioner, or just one person shop, they're really high when you start out. But as you grow, you realize I'm hitting my limit. I can't possibly do all this work. I need to start hiring more and more people, and those people have to get higher and higher quality. And eventually you realize that your margins have dropped a lot, but it's no big deal because as long as there's still profit for every additional client you add, as long as you're still making money, it's okay. So over time, accounting firms will start out speaking from experience, accounting firms will start out, it might be 75% profit margin, But once they start getting to be where they have 2 or 3 or 4 or 5 partners, it's going to drop to 40%, 30% if they get bigger. So.
Well, I know that's the jump that I'm looking to do now is like the same thing. I'm like, I've kind of maxed my time out. It's like, I'm the bottleneck. If I'm sick, we can't make any money. If I'm traveling or on vacation.
The growth stops once you hit your limit.
Right. And the way that I've talked with a lot of different other people that own marketing agencies and video production stuff that I do. And it's like, as long as you're billing, your billable hours are a certain rate. And as long as the person that you're paying is at least half of that rate, if not less than that, you're always good, as long as you're able to bill the hours.
Exactly. As long as that additional person pays for themselves, you can continue to grow. And those margins become less important as long as they are continually positive, right? If it's ever a negative, that's when you have a problem. And sometimes it can be a little negative because you got to start a person off and they may not be able to immediately generate that. That's that investment. And sometimes the first hire is the hardest because it's like, you may not have all the work that they need to be able to be making as much money as you want them to, and you can't get that work before you get them because you're maxed out. And so that first couple hires are the worst. And once you get, past those first 2, 3, 4 hires, there's a little bit of a snowball effect where every additional person's a little easier to add to your budget, and you can spread that work out a lot more, and it just becomes easier as you start scaling.
Sure. Well, it's really interesting seeing, again, the bottlenecks that restaurant has, like there's only so many chairs in that place. That's the most they can make. Or professional services, like you can only take on so many clients. What's kind of the method to that madness when people are looking to try to break the bottleneck, so to speak, in an accounting sense? Or what are some of those things that you see? Yeah,
I mean, when you get to a certain point, you have to bring in those people, and I think you just have to be very careful when you bring that person in that you're going to be able to grow that revenue. And sometimes it could be nice, like maybe you got this big, huge client that you're adding on and you don't have the time for it, but they're going to easily pay for that person. So maybe wait until you've got a big, huge rush of new business, then hire that person right before that new business comes in, just to kind of ease that. Other people just take the commitment where they realize they're going to maybe take a pay bump for a year or two to develop that capacity. We had a client who that was basically it. They were growing and they realized they hit their limit and they just started hiring, and they're like, I'm going to take a big pay cut for a while, but I know it's going to pay off. And it definitely did pay off for this client. They grew their business to be very big. And they just took that initial commitment. I think the most important with any decision you're doing as far as expanding your business is making sure you know exactly what's going to cost and that you project out exactly what those expenses are going to look like the best you can. Be conservative with that. And if you can live with those, even the worst case scenario numbers, go ahead and make that decision.
Well, I think there's so many people I'll talk with that don't know what their monthly, like what's your overhead every month. Like they don't even know the number. It's like, okay, you don't even know how much work you need to bring in to cover what it costs to run it or to pay you or do whatever, So it's always interesting.
Yeah, and that's the most important thing. That's good you brought that up. Before you even can do that, you need to be able to understand what your basic numbers even are. So if you're running your accounting world, if you're running your financial world based on how much money is in the bank account, and that's it, you're not going to be able to expand without. You're not going to have the knowledge you need to expand safely, right? It might work out, but you don't know. All you're going off is a bank account. And so what you need to know is how much money am I making for every additional client I add or product I sell or whatever it is. You got to know those margins. I just had a conversation with a client that sells like paper materials type stuff, just a variety of different paper materials. And we were talking about it, and we wanted to make sure we understand the margins on those things so that there is an understanding of how much money you're actually making for every product you sell. And we were talking, and they're like, well, we're not quite sure. We don't have that number. I'm like, well, that's something you need to have. You need to have those numbers. And the only way you're going to be able to get that is to have that regular accounting work where you know what your profit margin is every month, and then you can divide it out amongst your products, or amongst your service lines, whatever it is, and know, is this actually adding a lot of money? Maybe you do that analysis and you realize I'm spending all this time on this particular product or whatever, and I'm barely making anything, or maybe I'm losing money on it, while this other one I haven't paid much attention to is making all the money. And if you never looked at your numbers, that could happen to you. Usually people have a pretty good intuitive sense of what's working.
Right.
But every once in a while, people get surprised. And so if you're not keeping track of your income and your expenses every single month on a regular basis, it's hard to make good decisions of how to expand the business.
Sure. No, that's super helpful. One of the questions I had, just to kind of give people an idea of size and scope of the different, I mean, obviously you work with like a sole proprietor, like a one-person shop. What's the highest revenue type of business that you manage? You don't have to say what industry if you don't want to, or what name or anything. But
the bigger the client gets, usually the types of services they're asking us to do get a little different. One of our bigger ones has probably over 50 million in revenue. They can be as high as we have one that's over 100 million actually. They usually just want some very specific services, right? They usually have their own accounting teams at some point. They expand to that, and we're more just helping out with their complicated tax stuff, making sure those numbers look good or whatever for the tax return and giving tax consulting advice. Tax consulting is all about helping people minimize the taxes they should pay, but also be able to plan for it and know what it is ahead of time so they can properly allocate resources for their tax bill and also minimize it, of course. So it can be as big as that. I think the average client probably 500,000 revenue to 1.5 million, something like that. Probably the average. 90% of the work I do is for businesses and their owners. About 10% of the work I do is for individuals who don't own businesses, but they typically have rentals or higher income. They get paid a lot at their W-2 jobs, and they have pretty sizable brokerage accounts usually too. Sure.
It's just always interesting. And when I talk to people that aren't in the business world or own a business, or like you said, have a look under the hood, so to speak, it's always interesting to me when we'll talk about revenue and people don't. They just everyone just thinks like that's the amount of money that just comes in, and that's just what you take home. Like like the $100 million business, they don't just have $100 million in a bank account.
No.
You have to run the business still. I mean, before we started recording, we were talking about like professional athletes doing the same thing. You see this huge fat contract on ESPN, and they don't get that actual money, and that's like the most inefficient way to receive funds if you're going to get that money.
It is. When you get paid as an employee, you're going to pay payroll taxes. You're going to pay state income taxes, federal income taxes. I mean, if you're in the highest tax bracket, it's not too hard before you get close to half the income is going to taxes. Typically, most people don't pay that highest rate. But when you get wages like that, they're going to get hit the highest rates versus investment income. It's put in a brokerage account. You're going to pay capital gains, which is usually 15%. So significantly less. There's of course a bunch of other taxes that come into play to erode at that yet. But passive investment income can be beneficial just because you don't have to put as much work into that earning that income. Investment income, you can pay a lesser tax rate. Capital gains and putting money in retirement accounts, you can defer those taxes for a long time and take good advantage of that. There's lots of opportunities with that. Planning out your tax bill with a business. When you have business income, there's more flexibility. You can purchase things you can deduct to reduce your taxes. While those things are being deducted, they're actually helping you generate income. Rentals are a good example of that. You buy a rental house, you can start taking an appreciation deduction on that home. But what is that home doing in real life? Well, it's hopefully not depreciating. Usually they're appreciating, right? So while your asset's growing in value, it's still generating a deduction for you. And all that equity, you don't have to pay taxes on that until you sell the property. Well, you can borrow against that as well. Some of the richest people in the world, they don't usually have a lot of taxes. People complain about it, but their big reasons why is they have these huge asset piles, right? Usually stock in their company that they founded, and they can borrow against it and get that cash out without actually recognizing any taxes. And the value of that asset's growing so fast, they can just borrow again and keep borrowing against the excess value and never have to pay any taxes or at least defer it for a long time.
Sure.
To a much smaller degree, in our smaller business world, people can do that by acquiring real estate, those types of things. They can borrow against. When we borrow with our house, a home equity line of credit. People are usually pretty familiar with that. That is exactly what you're doing. You're borrowing against that equity without actually having to sell it and use that to invest in other things and grow your portfolio that way.
Sure.
So,
Well, it's always interesting just the different ways. Like I remember I read Tax-Free Wealth by, I'm going to mess his name up. It's in the Rich Dad, Poor Dad series. There's a specialized authors in Arizona. But he basically said in the first chapter, like, if you don't own a business or invest in real estate, don't read this book because there's very little you can do as a W-2 employee to like offset your taxes. You know?
A W-2 employee's first line of defense is their 401k. After that, that's it, right? There's nothing else they can do. They're going to have to start investing in, like you said, businesses, rental properties. That's where they can shelter some of that. And it's not necessarily about, sometimes I get people that think that if they buy a rental property, their taxes are going to go down. Well, not really. It's more so about growing your wealth in a tax efficient way. So that rental property is growing in value. It's generating some cash flow, sure, but that cash flow generally isn't very taxable. We have all kinds of deductions on that. We have the depreciation on the home, which isn't a real cash outlay. You're not actually spending that depreciation. You're just getting a deduction for it every year. So you're generally not creating a lot of taxes on your rental cash flow, and that appreciation, again, isn't being taxed. So it's about growing your income and your net worth tax efficiently. That's what it's going to be able to generate for you.
Sure. So as you were looking at career paths, like why did you pick CPA? Like what appealed to you on that side?
Well, I started getting into accounting when I got that internship at my firm, and I realized I liked it. It was interesting. It made sense. It felt very, very marketable. I realized that it's a heavy, big need. I enjoyed it enough, right? And I saw there was a lot of potential to grow this firm. I saw that there was a lot of need for these services. It was something that was in high demand that I saw around me, and that has really come true with just experiencing the growth of my business. There's a whole lot to it, but about 7 years ago, I didn't even have any clients. Really, my first client was my dad. As like, here you go, son, I'll be your first client.
Sure. Don't mess up my books, please.
Don't mess it up. That was it. That was my first client. And just because of the way the industry is, which we can talk about in accounting, but I realized that there were so many people that needed the services, and it's grown to the point now where I've got I'm nearing 300 clients. The revenue's grown at an incredible amount. There's just huge need. And across a lot of professional services, what's happening is there's a lot of people retiring. And so there's not as many people providing those services. So the demand has been increasing.
Sure. What's it been like to be a part of that growth and coming in as a partner, but then also trying to plan for the future, all the things that come with that?
Yeah, it can be stressful as a business owner. I think a lot of business owners are going to relate to this, but you start this thing and you think it's going to go, you think about it in one way in your mind. And when it happens, it's so much busier than you imagined it. And it's much harder to organize than you think. The growth happens when you have a successful business. It usually, for most people, and I see this with my clients too, the income grows faster than you think it's going to. And the income almost becomes secondary to just managing it. It becomes harder just to manage all of the new clients you have, all of the new business you have. And it's very easy for it to become very, very stressful and overwhelming. And so you really have to stop and take some time to, and I'm speaking about this as someone who needs to be better at this, but myself. But you realize you need to just be very much more, you just need to organize things and spend a lot more time just slowing down and being smart about that growth. Not just growing for the sake of growth, but making sure you're able to handle it and that you can mentally handle it and just grow smartly.
Sure. Well, and as you guys, like you said, you have like 300 clients. What does that look like for delegation? Because you obviously can't be on the phone with 300 people a day. No.
So that's another thing you got to get used to. As your business grows, when you're first starting out, you can handle it all yourself, right? It's pretty easy. You can be very responsive to people's questions right away. But as you grow, you realize I can't do that. And so a skill that becomes very important pretty quickly when you want to scale is you got to have good people with you helping you do it. And they need to be trained properly. And so you end up spending a lot of time just mentoring other people, helping them grow in their ways so that they can help you and you can help them in their career and they can help you grow your business, right? And that's the relationship. And just taking the time, what's really hard is taking the time to invest in them. Because, one of the mistakes people make, in my industry especially too, is like, well, I can just do it better. I can do it faster, right? Well, yeah, you can, but you can't do 300 better or faster. At some point, you are maxed out. And so you need to recreate yourself. You need to give another person that ability and train them and invest that time, even though it's a little painful at the beginning, so they can understand what you do. You're trying to recreate yourself. And you need to give that person an incentive to want to be you. You know, they got to be able to have that financial incentive. So you got to be able to invest in them, help them grow the business so there's enough income for them to see the benefit of doing that themselves. So it's a balancing act, and I'm still working on it too.
This episode is sponsored by Jacobsen Company, LLP, a CPA firm based in the Des Moines metro area. We actually had Grant, one of their partners, on the podcast as a guest, and they were gracious enough to sponsor today's show. Grant and his team are my personal accountants that help both my wife and I with our accounting, tax prep, and business planning for both of our businesses and for our family. And we brag on them often and have sent a ton of people their way over the years, which makes this ad really easy to endorse since I've had them on retainer for a couple of years now. Their team is always keeping me up to date on the latest litigation changes, tax law changes, and other things that I have no time and frankly, no interest in keeping up with all by myself. The year before I started working with Grant, I think my tax bill was over $30,000, and I had like 2 months to come up with that money. I was not sleeping. I was working myself ragged, trying to come up with the cash so the IRS didn't come after me. That's when I realized I needed a great CPA to keep me out of the hot water. After meeting with him and making some changes, I got a $10,000 refund the following year just by getting educated on how taxes work and leaning into their knowledge base. A good CPA is an invaluable resource for any small business out there. They offer everything from QuickBooks management all the way up to fractional CFO type services, depending on how big your business is. And their staff is really responsive and answer any and all stupid questions that I have every single month. Supporting the sponsors that support this show allows this podcast to continue to be free for you and that you can enjoy each and every week. If you're needing a new CPA for your personal tax prep or you're growing a business and need a well-versed accountant in your corner, make sure to check them out at jacobsencpa.net and tell them that you came from the Rhymes with Odd podcast. Now, let's get back to the conversation. We'll take a break and do the lightning round now just to lighten things up for you. We haven't given you the answers to these questions.
Boy. Here we go.
We're coming out of the gate hard with the first one here. How good are you at math, do you think, like now that you're into your career here?
Yeah, common misconception. People think accountants are like these algebra wizards that are really good at math and can do calculus. I'm terrible at calculus. My worst grade in college was business calculus. I wasn't very good at it. Accounting certainly involves math. People might roll their eyes when I say accounting doesn't actually have a lot of math. It does, obviously, have math. But what's harder about accounting is its organization. It's a language. You're learning a language and a way to organize those numbers and take a mess and turn it into something organized that makes sense. That's really what you're doing. It's really, basically, it's communication. Communicating numbers in a way that makes sense to people that may not understand how accounting works. And it's more memorization and organization than it is being a really smart math person. So anyone who's thinking about becoming an accountant or wants to understand what is their accountant doing, it isn't that they're necessarily really smart at math, it's just they're organized. They have to be a person that can organize numbers in an efficient way. That's really what it is.
Sure. I always say I'm terrible at math. It's like my worst subject ever.
Yeah.
And I'm so bad at math, but once it becomes accounting, I care a lot more because it's like,
means something.
Yes. I'm like, it could be, it's one of these stupid comedy movies, but it's like, just pretend it's, 25 steaks. And he's like, or 25 rocks. Yeah. And then it's like $25. Like, oh, I know that better.
Yeah. And it's fun too, especially when it's your business. You realize, oh, this is my money. This is kind of fun to see how it's growing and it becomes much more real. It's not just like, what is the area of a circle? I don't know,
Sure.
That doesn't mean anything to me, but when you can apply it to something, it means more.
Sure. Okay. So mental math here. Mm-hmm. This is the only math question I've got for you. If somebody wants to make $1 million top line revenue in their business in a year, how much money is that per day if they're making the same amount each day?
Oh boy. Let me think about it. Each day?
Mm-hmm.
Oh man. $500,000 for 6 months, $250 for a quarter. Break it down.
Mm-hmm.
Is it 2,000? I don't know. Is that close?
Yeah, $2,739.72.
Not too far off.
Sure. Well, it's funny because Paige and I were running business projections on another business we were looking at starting, and she was like pulling out a calculator, but I'm like, no, I know this. Like, if you want to do this amount, it's like this much per month. And you can like I just know the quick stuff.
That's interesting. I got to think about that. No, you got me thinking now.
Sure. Got you all figured out now. Okay. So next question. if somebody, we're going to ask, should they be an S-Corp or an LLC based on their profit at the end of the year? Okay.
Yeah.
So if a business has $50,000 in profit, what would you suggest, S-Corp or LLC?
Yeah. So, first off, when you form an LLC, it can be taxed many different ways. An LLC that's not taxed as an S-Corp is just a disregarded entity if it's just a one-person owner, which means you just treat it like it doesn't exist for your tax purposes and you just attach the income to your individual tax return. But $50,000, you can start thinking about what's called an S-Corp. You don't have to pay self-employment tax on S-Corp profits, but you have to pay a reasonable wage. And usually at $50,000, we can make that work to make enough money to benefit from the S-Corp. But it really just depends on that person's situation. So it doesn't always necessarily mean it's going to work at $50,000 of profit. But typically, that's where you're going to get enough self-employment tax savings because, again, the S-Corp doesn't pay any self-employment taxes on its profit. Self-employment taxes are taxes you pay on for Social Security and Medicare on your self-employed earnings. And again, S-Corps don't pay that. So if you can lower that amount that you're paying enough to justify the cost of turning that LLC into an S-Corp, that's where it makes sense. I typically advise clients right around $50,000, but it really depends. If that client doesn't think they're going to make that every year, then we might not think about it. If it's just a side job, a side gig, where they already have a big other job that's generating a lot of FICA taxes already, they're not going to pay a whole lot of self-employment taxes anyway, so it doesn't make sense. So it just depends on the person's situation.
Sure. So if they're on 50 or if they're doing about 50,000 a year in profit, that's like kind of the gray area, right?
Yeah, and it's a gray area too. So like some people might not feel that they can argue a very low wage and might have to still. So then they might think they have to have a higher threshold. They might think they have to make 100,000 before it makes sense. A lot of practitioners will just say 100,000 if you're asked this question because that's a really safe number that probably applies to most people.
Okay.
If you're going to make $100,000, the S-Corp's almost guaranteed to work as long as you can make that reasonable case.
And do it each year, right?
50,000 is like your break even, where you definitely will make money as long as you can argue a lower reasonable salary. But if you can't argue that, if you don't feel comfortable arguing that, if your situation can't entitle that, then you might have to have a higher threshold. So.
Okay. So then if they went up to like 150,000, $500,000, $1 million a year in profit.
Yeah. And so when you have someone that makes a lot of money, like if they're making $500,000 or $1 million, one thing about Social Security, a lot of people who make higher income realize too, is you only pay Social Security tax up to the first, they keep changing the number, but it's around 170,000 now. Once you make that, you're going to no longer pay Social Security taxes. You're going to start just paying Medicare. So that's 1.45%. If you're self-employed, you're paying both halves, right? So it's 2.9%. So you're only paying 2.9%. That's all you're saving with an S-Corp. But I always tell clients, if you're making $1 million, 2.9%, that's still a big number, right? Yeah. $29,000. So it's still plenty to justify turning the business into an S-Corp because it more than covers the cost of the service to turn it into an S-Corp if it's not already one. And some clients actually have really low thresholds. Let's say you've got a business that has employees and it's a partnership. Well, there's no additional cost from turning that business into an S-corporation because the only additional cost is typically when you have an LLC that's owned by just one person and has no employees, it doesn't need to file a business return. It doesn't need to do payroll. It doesn't need to do any of that stuff, so it can be relatively simple. But if you've got a business that has two partners, well, now you have to file a business return. You have to file what's called a partnership return. So that cost is already something you have to do. And if you've got employees, well, you already got to run payroll. So that's a cost you already got as well. So their barrier to turn it into an S-Corp is super simple. They already have to pay for all those services anyway. So there's no additional real cost to turning into an S-Corp and at least saving some self-employment tax. So again, it just depends on the situation. But if your income's really high, it usually makes sense. If you already got to do payroll and a business return, then it makes sense. I'm typically talking to a lot of clients that are sole proprietors, just them, just starting out. So that's why we have that discussion. I don't want them to, I always tell clients this, I'm in the business to help them make money, not make me money. I need to help you make money to justify my services' existence.
Sure.
And so that's usually, we talk about that.
Sure. No, I love it. What are like 2 or 3 of the most passed over, forgotten tax write-offs for businesses?
Oh, people forget that they use their internet for their business, right? And I always ask clients, do you use your internet for business? I'm like, yeah, all the time. I'm like, there's your internet deduction. Do you use your phone for business? Especially if a business owner that's got a full-time business, I'm like, they're living on their phone, right? Mm-hmm. They can deduct their phone. Any tablets or computers they utilize for the business often get forgotten. And then mileage is often not understood. how that deduction works and how you can contrast that with actually taking a deduction on an actual vehicle purchase. Usually I can probably spend an hour talking about how to deduct vehicles and what's the proper procedure on it. It's not a simple question, but for getting your mileage, your phone, your internet, those are some of the bigger ones. They're typically ones people forget, and the ones I'm most often adding to people's tax returns because they just don't think about it.
Sure. No, I love it. And then last question, after a long day, or especially around tax season, what's the best way that you unwind at the end of the day?
Oh man, I've got 3 kiddos at home, so I usually just like to go and hang out with my family. I like to just spend time with them, and I got a little boy who loves to come up and just hit me. He's a little boy, so his version of fun is just wrestling. So I like playing with him and with my girls too. We just got an old Nintendo Wii. If anyone remembers those old game systems,
nice.
So we're playing with the Wii. It's pretty fun. And
you guys playing Wii bowling or tennis? Or?
We do the Wii Sports. My son has some interesting interests. He has this game where there's these marbles. You have to go down these courses, and you got to adjust the stage so the marble goes right where it needs to go, so it doesn't fall off the stage. And I don't know. He likes that game. He's 6, so simple games like that please him. So It's just fun to see him learn how to play the game. So just hanging out with my family is probably what I do most.
Sure. Paige and I just talked about getting Wii because we were wanting to do tennis, and we're like, we should just buy one. And they're probably like a couple $100 now.
$100.
Yeah.
Speaking from experience, $100
That's good entertainment, cheap entertainment. Mm-hmm. All right, you passed the gauntlet here.
All
that
right,
was good.
There we go.
Sorry about the mental math on the very first question.
Oh, that's okay. I was happy I was even remotely close.
Yeah.
That's another misconception. People think accountants are good with math in their head. I'm terrible without my calculator. I'm dead in the water. I can't do anything unless I have my calculator.
Sure. I love it. Okay, so kind of shifting gears here. I wanted to talk about like the way that you guys kind of walk with people through this process, because I know I guess I'll share my experience before we came to you guys, because it's relevant to this whole conversation. So when I started out, I had a W-2 job. I was doing projects on the side. Yep. And then when I started doing my business decently enough, I'm like, I should probably like incorporate and then get like a CPA and do it more legit. Even though it was a side hustle, it was making a decent amount of money.
Yeah.
So I went and I had a referral to a guy. I won't say who it is. They're in the Des Moines area. Went to them. And Paige has a really good feel for like personalities and just like can read people really well. And she's like, Ryan, I don't like this guy. Like he's not, he's kind of just like poo-pooing on your business like it's just stupid or a waste of time or that you're not actually going to do. And I was telling her like, oh no, it's fine. Cause he came really highly recommended from a friend of mine. And so long story short, we work with this guy, and it came up on tax season, and we had in our contract, they were paying our tax payments for the business, and we're supposed to, here's what your tax bill is, take care of it. So we signed the papers, did everything. I didn't hear anything from him for 6 months. And then I get a call from the IRS that I was delinquent on my tax payment for that tax year. And it was going into like not forbearance or whatever it's called. Like it's incurring massive penalties. And I call my CPA. I'm like, dude, what the heck? Like and he just like, I wasn't supposed to do that. What are you talking about? Like, and I'm like, pull up the contract. I'm like, you literally like, this is what we were paying you to do. And you wouldn't do it. And it was just this huge chaotic craziness.
Yeah.
So I think I can't remember what the tax bill was that year, but it was like in excess of like $20,000.
Yep.
And in the infancy of my business at that time, that was like more than I could come up with. I'm like, this is so impossible for me to think about. It was a nightmare.
Yeah.
So that was my first experience with a CPA. It wasn't your firm, but it was like, I'm like, is there a better way out here? Like maybe, but I think just like, at least how much of this do you guys have to like educate clients about like the process and how this works and all that type of stuff? Yeah.
So that's one of the common complaints we hear with new clients is, a lot of these CPAs, they're, like I mentioned earlier, the CPA industry is really hurting for people. Maybe I didn't mention this earlier, but it's really hard to find people in the CPA industry. It's apparently accounting isn't considered cool. I don't know what's this about, but people don't want to go into accounting as much. They want to be, software engineers or financial analysts. They want to go to investment banking, right? That's the cooler degree paths. But the results are we don't have a lot of accountants. So there's a lot of these practitioners who are just getting the job done, and they do a very, very poor job of investing and communicating to the client what they're doing. And so sometimes they just flat out fail to do what they said they were going to do because they ran out of time. Sometimes they just did a really poor job of explaining something to you and you didn't understand what they said. And they don't make themselves very available, or, they charge you every time you call them. And so you feel scared to call your accountant because you don't want the bill for, the 10-minute conversation. And so that barrier to communication is where we're hearing most. People just don't understand what their situation is. Their accountant didn't do a good job explaining it to them. And so they don't understand. And another problem is you're not picking this up every day. And so you easily forget, even when it's explained well, sometimes you forget. And if your accountant isn't very available to for you to answer questions, then it becomes really difficult. And so what we do to explain to clients is I usually have them come in for a face-to-face meeting. I think face-to-face meetings have a certain level of help that just goes beyond what you can do. Video meetings can still be great too, no doubt. But when you're sitting down across the table from someone, it's way easier to make sure they understand and ask them, do you understand? And make yourself, what I do with all my clients is, for most of my clients opt for this, but I make myself available, I call it unlimited phone and email support. Call me or email me whenever you want if there's anything you don't understand. Because when we sit down and have an hour and a half meeting for the first time and they explain to you a lot of information, I don't know about you, but it's hard to remember a lot of new information. And so what I try to do is make myself very available so they can talk with me and think through it. And usually after a few years, they really got it down and they understand. And, they've had that understanding for me because I invested that time to explain. So that's probably the number one thing we really try to do is just spend a lot of time just explaining it, asking the client, does that make sense? Do you understand that? And just going through it and actually being able to devote that and not just getting it done and saying, here it is, and then don't ever talk to them. If they don't understand it, there's going to be a problem. And, there's a degree where the client needs to take a little bit of ownership too, right? They need to actually invest some time to try to understand. Sometimes I get clients who just want me to handle it all and they don't want to think about anything. Well, you got to think about something. This is your business, right? It's important to you. Mm-hmm. So you need to invest some time too, right? Obviously, you're paying me to help take care of a lot of the harder stuff, but there's still some investment you need to do on your end of understanding your own business. I always tell clients, you should be able to understand your business's numbers in a lot of ways better than me because you're the one in it every day, doing these services, doing the things that you need to do. So
sure.
All of that.
Well, it's an interesting piece too, because I hear this a lot with, I think of stories like Dane Cook. If you've heard the comedian that his brother embezzled like $15 million from because he was managing his money for him. And because Dane was
trust him.
Yeah, he's my brother.
He'll do it, right?
He'll do it.
Just trust it.
And you start hearing these kind of stories like that. It's always interesting to me why people don't, like, everyone needs to care about this,
Absolutely.
It's your livelihood,
It's your money, right? I mean, that's just something everyone should care about. I'm all for outsourcing, right? Outsourcing can be a really powerful thing as long as you still exercise great oversight. When we're in college, one of the things we learn a lot about is all these different fraud cases for audit class. And it's really interesting, all of the things that you can read about. We watch movies where they go over all these frauds and, it's always, lady in accounting or this guy in accounting that's been there forever, right? That you've trusted forever. Oh, well, they just do such a good job. If there's no internal controls, if there's no one understanding what they're doing, then it becomes super easy for them to just to swipe money. Mm-hmm. We've had some experiences with us. We've had clients where we had a client, I won't give any details on the specifics, but they had a CFO who they had hired and they weren't overdoing a good job overseeing what this person was doing. And they were making some very interesting shopping trips on the company credit card. And it's just available easy for anyone to see, but they're going to Victoria's Secret, they're going on vacation, they're giving themselves free health insurance on payroll. This was a client we had, and we had to analyze how much money, and I think the person stole like $20,000, $30,000. And again, just no one looking at things.
And at that point, it's not an accident. You weren't like, you put the wrong card on the table once the Victoria's Secret during Christmas shopping or something.
This wasn't just a one-time thing. This was, we're going on shopping sprees regularly,
Sure.
We're going all kinds of places. You just gotta understand your numbers. It's good to understand you don't have the time to sit there and do all the accounting work yourself, but you always need to exercise that really good oversight and make sure you understand what your accountant is actually doing. Whether you have an in-house accountant or your outside accountant, you got to make sure you understand how those taxes are working and sometimes I ask my clients to, it's always interesting when I ask them after a year, I have them come back the next year and I say, okay, tell me in your words how I advised you. Like, what did I tell you? Why does the S-Corp benefit you? Why does this benefit you? And a lot of people just say, well, it's save tax. Well, okay. Well, I want you to make sure you can understand exactly why. And after I've had a client for a few years, usually they can say, oh, I know exactly why, because you did this, and this is why. I'm like, great, good. We've communicated well to you.
Mm-hmm.
Yeah.
Well, I think, and as you said, like they know the business better than, or they should better than you because they're in it every day. But I think a lot of people they have their passion for whatever their product or service is, and they don't really like think too much more about it. But I always think that's, I mean, it's the reality of what you do, right? It's like if it doesn't make sense on paper at some point, or you have a plan of how this is going to get, if it's losing money now, but it's like, okay, I'm doing this or that, you know. How many conversations have you had with people where you're like, talking them off the ledge, like, hey, you don't realize this is like going to fail if you don't do this or that?
I've had clients where we talk about things and we're talking and we're trying to decide what makes sense. And I'm looking at their numbers and I'm like, like you're really not, this isn't really working. You've been working on this for 3 or 4 years. You tell me you're constantly having these money issues. I'm like, at some point you need to consider, is this business actually working? And sometimes it's hard to make a decision to just be done with it and move on to something else. But some people who've moved on to things that work better are really happy they did it because they realized it just wasn't working. And so just having that understanding, like sometimes, I've heard this before and I've seen it sometimes with some of my clients. One of the easiest ways to turn something you like into something you don't like is to start a business in it. And now you hate it, right? There has to be an economical sense. Your work doesn't have to be something you necessarily love as a passion, but it's something you should be able to at least enjoy doing, right, to some degree. And actually generate a decent return, right? Any business that doesn't generate return isn't worth doing, no matter how much you like it. It might be a great hobby, but maybe it's just not a good business.
Sure. No, that's super important to understand. What's kind of the I would say the biggest mistakes to avoid as like a small business owner when it comes to accounting? What are some of those things that you just keep time and time again seeing people messing up?
The number one is they just don't even look at their numbers. They don't even look at it, right? They just have a business, or they maybe don't even have a separate business bank account. They don't really analyze their numbers. They don't do accounting, right? They just leave it alone and just trust that they can figure it out at the end. They don't have regular routine tracking of their numbers throughout the year, right? Especially for a new business, like that's their number one issue. Even bigger businesses, they might even, I've had a lot of clients do this, not a lot, but several, who we do all their accounting or they have an in-house accountant and we just help out with different things, but they do it all and they don't look at their financial statements at all. Like they don't even read them. I had a client one time who told me, yeah, I just do them for taxes. I don't really look at them. I'm like, why are you paying me to do them then? Like, what's the point of this? They just said, well, I just need to do it for taxes. That's it. And so when you reduce your accounting reality, your finances to just raw compliance, doing what I can do so I don't go to jail, right? You've missed out on how to analyze how your business is actually doing. The main reason your business exists, this is true for all businesses, is the main reason they exist is to make money for the owners, right? There's a whole slew of other reasons why you want to do a business. It's not just make money, but if that's not there, then you don't have a business, you have something else, right? Which, there's lots of nonprofits out there. That's a whole nother world. Their goal isn't necessarily to make money. They still need to make money to live, by the way. But you need to be able to actually analyze your numbers throughout the year. So the biggest mistake I see is people who just don't really look at them until they're sitting down with their accountant once a year.
Sure. I would echo that and also say saving for taxes or allocating funds for taxes. The amount of people... That's a big one. when Paige started her business, she had like people in her salon suite that didn't do that. They're just like, well, I thought it would they just didn't even understand what they're doing with it. And it's like, then you're going to get this huge tax bill and not even have any money saved, I
see that a lot with people who are transitioning from a W-2 job to their own job, right? When you're an employee, you don't realize that your employer is doing a service for you. They're withholding taxes for you, but you don't actually quote unquote pay your taxes until you actually file that tax return. You compare to what your tax actually is to what was withheld. And then a lot of people get refunds, right? What is that refund? It's money that was withheld in excess of what you really needed to pay. Well, guess what happens when you become your own business owner? You get the privilege of paying that all yourself. There's no one doing that for you anymore. On top of that, you pay self-employment tax. For most people, they pay Social Security and Medicare, which is 7.65%. Social Security, Medicare. Well, your employer was paying the other half. That was only half the tax on your paycheck. The employer, again, was paying the other half. Guess what happens when you become your own boss? You get to pay both halves. So you go from paying 7.65% to 15.3%. So you're paying, not only are you paying a higher tax rate because of that, no one's paying it for you. I've had clients who went from a high-level W-2 position and got a consulting role, 1099, contractor. They had a lot of different customers they were working for. And they started this role, and they had this false impression that they were paying, their income was a little bit higher, but not in a new tax bracket or anything. They had this impression, man, I'm paying more than I was before. And we had, done all the right things. We moved them to an S-Corp. We cut down their self-employment tax so it hadn't increased much at all. And we were analyzing it all, making sure everything was legit and all that. And what they just didn't realize was I showed them the numbers that they were paying about the same, maybe slightly more than they were before, but they had this idea that they were paying way more. I never had to pay this much. You show them their pay stub and you point at where the withholding is and they realize, oh, I was paying this much. I just didn't realize it because someone was doing it for me. You have much more ownership of your tax bill when you're the one writing the check, right? So there's that mental hurdle where people need to realize they are paying these taxes, and even if they aren't self-employed, they're still paying them. There's just no one doing it for you. And so you need to set aside that money or pay quarterly or doing those things. And yeah, I should have mentioned that's a huge one. Just not saving for your taxes. And what's that a direct result of? Not knowing your numbers, not tracking them. It's not too hard to just know your profit, multiply it by 40%, and boom, you kind of have a general idea, right? It can be as much as this, right? That's all you literally need to do. If any business owner takes their profit, multiplies by 40%, that would give you probably too high of a number, but at least a decent number to save, and then you'll be covered. And it's just having an understanding of what that profit even is. A lot of my clients, they come in, they don't know their taxes, but they have no idea they don't know what their profit is to determine the tax.
Mm-hmm. No, it makes a lot of sense. And I know just that's the one that's like terrifying to me. It's like those stories, and then hearing people that have been investing for like 30 years and they don't actually invest the money. They just deposit the money in their account and don't invest in anything.
Oh,
and I'm
man.
like, those are the two things. And I'm like,
that's a bad use of your money.
I'm losing sleep just for this person, like hearing these stories. But I always think it's interesting too, because people that don't take an interest in it, like you said, they'll just kind of push it under the rug.
Yeah.
But you have to. It's like the reality of, it's like, I'm not a big foodie, but like you have to eat to survive. Like I don't like accounting, but like you have to do it, or
your business will not work well.
Or
you'll be in stress all the time.
Yeah. Or you'll be coming for, different people. Because I know when we first started working together, I think you told me there was like one of your clients had they'd made a decent amount of money and just didn't pay their taxes, and then they just like immediately went bankrupt afterwards or something.
Yes. We had a client that was making a lot of money, and then they stopped making the money. And then everything just came crashing down, right? And so, if you don't pay your taxes, if you don't have a good analysis of your numbers, you might think you're making money. Very quickly, your costs can exceed your revenue and you're losing money. And if you haven't been paying your taxes, now all that tax from when you were making money is coming due the same time that all your losses have accumulated. And that's how, you ever hear, if you're just listening to the radio for just an hour and you'll hear multiple commercials about IRS tax debt and how we're going to solve your IRS tax problems. All of that can be avoided by just knowing your profit, multiply it by a high percent, probably higher than what you need to, and setting it aside. And that's all it is. I mean, and if you want that number to be more precise, talk to your accountant or whoever, do some research and just analyze, okay, maybe it's only 25% I need to set aside. As long as you're doing that, you can never have IRS tax problems. I always tell clients, like, they tell me, I don't have the money for the taxes. And if they haven't had the numbers, they don't know. And a lot of times it's the rookie business owners, they just don't know. No one explained it very well to them, of course. But some of these people have been doing this a while and still don't get it. And then the reality is that you had the money at one point, right? You obviously had it, and then they spend it, right? And then they don't have it to pay the taxes. And so it's falsely spending money that really was never yours to begin with. And that's where you run into problems.
Yeah, and that's my biggest thing is like the year that I had the terrible tax experience and the IRS calling me and all this stuff. And like I wasn't saving enough, but I was also the most inefficient structure possible where my tax rate was like 40+%.
Yeah, you were not an S-Corp, but you had a bunch of stuff.
It was a bad situation, but that kind of got me on this path of like, I need to understand this. So I started reading a bunch of books and ended up landing on Mike Michalowicz's Profit First. I don't know if I think I've mentioned it to you many times because I might be the one weirdo out of all 300 of your clients that actually follows that process. Does anybody else do that?
I've got like five of them.
Yes!
You're not the only one.
Woo!
And really what that boils down to and why I do like it is that ultimately what it does is you're setting aside money for various reasons. It forces you to do that in a very direct, easy to understand way. You can do it in a spreadsheet. I mean, really what it is, it's no different than Dave Ramsey's envelope method where he just, puts money in. That's kind of dated now. No one uses that. But, just the idea of setting aside money for specific purposes and not touching it. That's really what it boils down to.
Sure. No, and I love that process. I'll put a link, and I did a review on my YouTube channel of the book and the process. But the long or the very short version of it is like for every dollar that comes in, you have target allocation percentages or TAPs.
Yep.
And then you just everything right off the top, you immediately put it. So for me, I think my TAPs are like 25% of every dollar I make goes into a tax savings account. So then I'm not slapped with a massive tax bill that I don't have the cash for.
Yep.
I do 10% for profit savings that I can use for large purchases, or if I have overflow cash issues, it's like an emergency fund. 40% goes to owner comp for me. So I'll take 40% of everything I make that I have to pay myself. And then the other 25% is operating expenses. So that forces me to operate my business with only a quarter of what comes in.
And that's really the key right there.
Yeah. And then it's not like, well, crap, I'm going to buy all the stuff I don't need and I have to like borrow from all these other accounts. It's like, no, you have to operate it like it's an envelope system. There's only so much money in that account. Yes. You can't just keep moving the money around,
And Ryan, that's kind of what all budgeting really boils down to, is knowing how much money you have, putting it aside for certain reasons, and not spending more than what you set aside.
Yeah.
I mean, that's really what this is. And this is a way to do it. And it's really, really good. And just setting it aside. And that's another problem. You mentioned just buying stuff sometimes I hear clients that, I just need to buy stuff so I don't pay taxes, right?
Is the goal to not pay taxes or have no money?
The goal, I want all the clients to understand, the goal isn't, all people to understand, the goal isn't pay the least amount of taxes. I mean, if you want to pay the least amount of taxes, everyone should just go buy a $100,000 SUV and call it a day, right? Drive it once for business purposes and then put it in your garage. That would do it, right? Is that a good use of your money? No. Paying zero taxes isn't necessarily the real goal at all, actually. The goal, and I tell clients this, is to grow your net worth as tax efficiently as possible. If I spend money on something I don't really need and take a deduction for my business, well, you're still losing more money than had you just paid the taxes. So really all a tax deduction does for you is gives you a really good discount on that item. So if there was something you needed to grow your business or expand your business or cut costs or whatever, if it was something that's going to help one of those things and you're in a particularly high tax bracket this year or whatever, your tax rate functions as just a discount on that item. So you get instead of costing $100,000, it only costs $75,000 or whatever. Keep the math easy. And so now you get an item that's worth more than what it is, but you worth more than what you actually had to spend to get it because you got that nice tax break. And then you can use that to make even more money. That's how you're efficiently using it. If you're buying a $100,000 thing that only sucks money out of you, that's a bad decision. At some point, it's of course free to use your money as you want if you're wanting to have a little fun, right? You save your money to live your life ultimately, but you can't make such a huge financial decision if it's going to hurt your company or hurt you financially. You can spend money to have some fun, but it has to be limited within the numbers that you set aside.
And it's interesting you bring that up. I had a family member telling me they had a friend, this was years ago, that was a plumber, got a call like late December from his accountant that said, hey, you need to spend a ton of money because your profit is like really high. And I'm like, isn't the goal to have
not a good advice.
Isn't the goal of running a business to have a lot of profit? Like, yes, you pay your tax on it, but
yes.
So then he went and bought a new truck and a bunch of new tools and and they took his tax bill low, but I'm like, yeah, but he had all this money at the end of the year, which is what you want as a business owner, and then you just went and spent it on stuff that you didn't need. I'm like, it's not.
That's a backwards way of thinking.
It's like spending $1 to save a quarter. It's like, what's the point of this?
Sometimes it's from my fellow CPAs who maybe advise those types of things. They're very focused on the tax bill and only the tax bill. They're not looking at the client from their overall financial standpoint. They just want to make the client happy to pay the least amount of tax possible, and just say, oh, well, you'd rather do that than have the IRS own it, right? Well, I mean, yes, to some degree, but again, it has to be something you actually need, or else you're just blowing money on things you didn't need. I mean, it's really what it boils down to.
Sure. No, I totally agree. What are some of the future plans for your firm? You mentioned you've been a junior partner for 4 years? 2 years?
Over 2 years now.
Over 2 years.
Yeah.
Now that you're kind of in the thick of it, what's kind of you mentioned you have over 10 employees. What's kind of the goal with the firm as you guys grow?
Yeah, I want to grow it as reasonably quickly as I can. All right. I'm learning that. I don't want to grow too fast. I've learned that lesson, but I want to grow it as much as we can reasonably get it to be. I'd love it to be a 50, 100, 200 person firm someday. I mean, I'm pretty young yet. I'm only 31. And so my goal is to grow this firm as big as I can get it. I'm getting better at hiring people, onboarding people, getting people into our processes, having other more experienced staff train people and grow things. We're actually outgrowing our current space. We won't be here very much longer. At some point this year, we're going to be moving to a new space. Haven't established where exactly yet. We're thinking about maybe even buying a small building. We'll see how the numbers work, but
there's a 1,200 square foot, 2 doors down. If
there we go.
There
might not be quite enough space.
We're downsizing, and everyone's going to share a desk. So this is great.
We're looking at, so if anyone's got any office space, let me know. But
sure.
A lot of it's really expensive. Ryan and I were talking about that a little bit earlier, but the long-term thought is I want to be able to grow the thing so I have like 10, 12 partners, right? I want to have my current staff grow and develop. I was mentioning investing in them, making sure they understand that they can make money on this too, grow on this business. Some of the things we do at our firm that are probably a little bit unique compared to most CPA firms is we give all of our staff the opportunity to bring in their own clients. And if they bring in a client, if they do the initial interview, they propose prices and get the client to agree to do services with us, we give them a 20% commission on all revenue brought in for that client forever.
Wow.
So a lot of firms will do that maybe just the first year or a lesser percentage. Ours used to be lesser too, but as we realize with this growth is we want our staff to be able to become us, okay? We're trying to recreate ourselves. And so we do that 20% commission that gives the staff direct incentives to help us grow this firm too, because now they realize they get a lot of money every time they bring in a new client, especially a big one. And so that gives them incentive to go out there and network, grow the business, grow their own business, and kind of grow with us. That's kind of how I got started too. I started bringing a lot of clients. At some point, it didn't make sense to have me as an employee getting a salary plus a commission anymore. My managing partner was just like, we need to make you a partner. That this math doesn't work anymore. You've created your own entire business essentially. And so I always tell my staff, we want you to create your own business within our business. So you don't have to go create your own. You can make it right here and help this firm grow. And so that's a lot what we want to do and encourage that and grow the people we have so that they are the new partners of our firm and we're continuing to expand that way. So we also, if you know anything about accounting, and this isn't just the accounting industry, but a lot of times the hours are really rough right around tax season. 55, 60, 65 hours a week. I've put in more hours than that before. I'm not very happy about that I do that, but I do have to sometimes. But one thing we do for our staff is we pay them overtime. So anytime they work over 40 hours, we add that to their vacation time and they can either get that paid out as extra pay for their hours or they can take more time off.
Well, especially after tax season, they might want to take a little vacation.
And they accumulate a lot of time off, I'm telling you. And they'll take a couple weeks off and they don't need to feel guilty about it because they basically, they worked early and they borrowed from later in the year and put that time at the beginning of the year so they can take off. And we always tell people, it's Iowa, right? So what are you doing in January, February, March, first half of April anyway? There's not a lot you can do outside. So then you can get a lot of time built up and take a bunch of vacation off. Our office is pretty pretty sparse in the middle of July. So
Sure. That's awesome. Well, it's great having you in.
Yeah.
I think it's helpful to just for people to understand, like, hopefully people weren't yawning halfway through when we're talking and in the weeds about this topic, but it's so important to running an efficient business is to, like, know and understand your numbers and or have someone that does, because if you don't, you're dead in the water. It's really important to focus on. So
100%.
Well, Grant, it was great having you on.
Awesome.
Any place that people can go to connect with you if they're listen to this conversation, they're like, I need to set up a consult with these guys because they clearly know more than what my current CPA is, or I don't have one yet and I probably need to get one.
You can go to jacobsencpa.net. Just Google Jacobsen Company.
It's
CPA.
Jacobsen with an E, right?
It is Jacobsen with an E, S-E-N.
Yep.
So just Google us. You can find us right there. We're on the web. That's an old term. I shouldn't use that. But you can find us on LinkedIn. You can find us on Facebook. Just look us up. My email is gbooth@jacobsencpa.net. Gbooth, Gbooth. Again, you can just reach out right there on the website. We have our contact information there too as well. So pretty easy to reach out. We're getting more and more website inquiries these days. So yeah.
Very cool. Well, thanks for coming on. I mean, it's really fun to connect. And as people have probably heard at this point in the show, like, you guys sponsor some of the episodes. So I really do appreciate the support of the show and getting these conversations going to help bridge the gap between where people are and where they want to be with their business. So appreciate the time.
Absolutely.
Perfect. Well, if you guys made it this far, you guys know what to do. If you're listening on YouTube or Spotify, make sure to subscribe for future episodes. Check us out on social media. Until then, my name is Ryan Snaadt. It rhymes with odd, and I'm out. Peace. Thank you so much for watching yet another episode of the Rhymes with Odd podcast. We really do appreciate your support. If you could give us a 5-star review on Apple iTunes, that makes a world of difference, guys. Also, if you're tuning in on YouTube or Spotify, make sure to subscribe so you don't miss another episode, and check us out on social media. Also, if you'd like to inquire more about our services here at Snaadt Media Group or learn about doing your own podcast for your own business, you can find us at snaadmedia.com. We'll see you in the next episode. Peace.